The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Goodness me, already a busy day. Lots of big numbers hitting the wires. But the good news is it's the Squawk Box. And we've got Karen Joe back from Lisbon. And I'm Steve Sedgwick. And these actually are your headlines. Well, the President-elect Donald Trump makes another shock pick for, this time for Attorney General, tapping controversial Florida Representative Matt Gaetz. Whilst NBC News now projects Republicans will maintain control of the House in a red sweep of Washington.
Politics is tough, and it's in many cases not a very nice world, but it is a nice world today, and I appreciate very much a transition that's so smooth. It'll be as smooth as it can get.
The Trump trade seems to be settling down somewhat as fresh US inflation data supports expectations for a December Fed cut. Hedge fund billionaire David Einhorn warns of further price pressure volatility at CNBC's Delivering Alpha.
We have increased our bets on inflation. I think that we're going to have another inflection up inflation. I think that what the policy mix that is being proposed, I think it is inflationary.
The crypto rally gathers pace, with Bitcoin briefly topping 93,000 for the first time, with Dogecoin more than doubling since the US election. Expert advisors to German Chancellor Olaf Scholz slashed their growth forecast for next year, delivering another blow to the beleaguered economy as political parties shift into campaign mode ahead of February's elections.
Either we give money to the armed forces or we have secure pensions. Either we support Ukraine or we invest in Germany. Making a decision between those things is wrong, and it's leading our country astray.
Morning, Karen. How are you?
Good morning. Very well, thank you.
Good. Yeah, good to have you back. Look, I do want to go straight into the Siemens numbers. It's one of the Europe's most important companies, market cap of 144 billion euros as well. And back in September, the CFO, Ralph Thomas, did say the trend is moving in terms of sales growth, moving towards, not towards 4%, but towards 3%. So when I see the revenue figure here, fully a comparable revenue grew by 3%, and then the Reuters says missing target range of 4 to 8%. I'm scratching my head a little bit because, and I'll go through all the numbers, I promise everyone, but if the CFO in Börsenzeitung, German newspaper, told us back in September we're heading towards 3%, why should anyone be surprised when we get to 3% rather than the 4 to 8% that the analysts are now telling me, or the Reuters is telling me that we've missed? You see my conundrum. Anyway, here are the numbers. 22.93 billion euros in the fourth quarter orders versus 21.36 billion in the company gathered consensus. Fourth quarter revenue is up 1%. Fourth quarter profit at industrial business, 3.1 billion euros compared with 3 billion, again, in a company gathered consensus. I can carry on with these numbers, but by and large, the Reuters group are telling us it's a miss. I'm telling you it may well be a miss of the target, but it's something that we've been well prepared for. What else are they saying today as well? They expect moderate economic growth in full year 2025, citing geopolitics, trade conflicts, challenges in manufacturing. And let us be brutally honest about it. We're all just waiting to see, especially the likes of Siemens, what Mr. Trump does next.
Yeah, just looking at some of the profitability margins here, the mobility profit margin, 8 to 10%. The question is whether that's going to be good enough at this point. But I think there's a lot of headwinds, of course, around Germany as we talk about whether any incoming government can do anything to try and make it more business friendly. And let's face it, it's not. We've seen, three major companies decide to shrink their footprint in Germany just in recent months. And this is, of course, the line when we talk about the industrial nature of Germany. So is it seeing the same headwinds still, and is it hopeful of change?
Yeah, I mean, the beautiful thing about Siemens is it is a huge international company that doesn't rely on Germany for its, for the bulk of its sales as well. But the valuations of European company, I mean, this one trades at 16 times forward. It's not lowly valuation compared with industrials elsewhere. But the one-year performance it's a little bit underwhelming, really. It's up around about 5.6%. I'm genuinely, this is why I love my job so much, I'm fascinated by seeing how this opens in 2 hours because, again, they're talking about revenue growth going forward. I just talked to you about the 4 to 8% of last year, which they've missed because it's 3%, but now they're saying 3 to 7% going forward as well. So the top end is still very much within range of where they've hoped to be previously.
Yeah, it's fairly wide range though, isn't it?
Oh gosh, yes, absolutely. We got the CEO, an interview with the CEO, Roland Bush. We'll bring you that in exactly, here you go, this is around here, but exactly 40 minutes time.
We've got to talk about the politics as NBC News projects that the Republican Party has retained control of the House of Representatives, completing a sweep over both chambers of Congress and the White House. The GOP's slim majority in the House means the party will have the numbers it needs to enact President-elect Trump's policies when he returns to power. Donald Trump has picked Florida Representative Matt Gaetz as his Attorney General, causing a stir within Washington by naming a political firebrand and fierce defender of election fraud claims to the head of the Justice Department. Gaetz backed Trump throughout the presidential campaign and in his various legal cases. Gaetz himself once came under investigation by the Justice Department but was not charged. Once a fierce rival, now a key ally, Florida Senator Marco Rubio is set to become the new U.S. Secretary of State under President-elect Trump. Rubio is known for his hawkish position on China and Iran and voted against the U.S.'s latest military aid package for Ukraine. Rubio told NBC News back in September he sees a negotiated settlement as the only viable way to end Russia's invasion of Ukraine. John Thune, the senator from South Dakota, will become the new Republican Senate leader, succeeding Mitch McConnell. Thune is widely viewed as a more seasoned Republican Party leader and has had an uneven relationship with Donald Trump in the past, having hit out over his role in the January 6 riots. Outgoing President Joe Biden hosted Donald Trump at the White House Wednesday. The pair spoke for almost 2 hours as the two sides prepare for a transition of power. Speaking before reporters in the Oval Office, Biden congratulated Trump on his election victory and vowed a peaceful handover.
And former President,
Thank you very
Donald,
much.
congratulations.
Thank you very much.
And looking forward to having like we said, smooth transition. Do everything we can to make sure you're accommodated, what you need. And we're going to get a chance to talk about some of that today. So
Good.
welcome
Thank you
back.
very much. And thank you very much. And politics is tough. And it's, in many cases, not a very nice world, but it is a nice world today, and I appreciate very much a transition that's so smooth. It'll be as smooth as it can get, and I very much appreciate that, Jim.
Trump's election victory was top of mind for investors at CNBC's Delivering Alpha Summit in New York. We heard from top investors on what they think the election will mean for markets.
We've got issues that we have to resolve. We've got issues that we have to deal with. We've got to fix our balance sheet. We've got to get this immigration problem finally behind us. And I think Trump is going to do that. I really do. I think he's going to deal with those issues head on. I like the fact that he's putting a cabinet together right away. We're not waiting a month to pick one at a time and do all that stuff. He's got a plan. I think he's going to do a good job.
I think it's a very good break for the whole country that at least we have a decisive winner and that we can get on with things and begin to figure out where to go from here. So I think in a lot of ways this was a very good outcome just in terms of political stability compared to kind of what I was worried about maybe a week or so ago.
Okay, let's get back to the data. US inflation picked up to 2.6% in October. That's a higher reading than in September, but it is in line with analysts' expectations. Now, you can go core, you can go super core. Let's go core. Stripping out volatile food and energy prices, core inflation held steady at 3.3%, also in line with expectations, whilst monthly core prices picked up 0.3% for a third month in a row. But interestingly, Karen, even though it was mildly higher and of course higher than 2%, the market seemed to believe that nothing has been done to dent the prospects of a December rate cut.
The market's seeing it as being in line with their expectations, even though we're still a little bit of a distance off that 2% handle. But if you take a look at the reaction on equity markets, we didn't get much movement, did we? Barely 0.1% on the Dow, barely any movement at all on the S&P 500, and in fact a slight retreat for the Nasdaq. So it does feel as though we've run out of some of that euphoric optimism that's been on markets. So we've run into a slightly slower pace now on these boards. In terms of the big moving names, if you look at the individual ones, it was Home Depot to the upside, a consumption play for the Dow. For the S&P 500 was Amazon again, another consumption stock. So investors are eyeing just what Main Street is going to be looking like as we come up to the all-important holiday period, but of course going to next year. And there's still this other feature of what does the Trump trade really mean, and will we do actually genuinely see more investment dollars, more M&A action, and will that cause some sort of ripple across in terms of even the employment market from here? I think there are a lot of moving pieces, and we saw it reflected on the Treasury boards yesterday, which moved in one direction, and that was higher. So you can see the 2-year 4.31%, although the market's still baking in the likelihood of another rate cut into year end. 83% chance now, a 25 basis point rate cut in December. That was up from 59% a day ago. The 10-year, that's where we've seen some movement, 4.46, where we are traded at currently. We got to 4.48% in the last 24 hours, the highest since the 1st of July. The 30-year also marching north around a 5-month peak. And no surprise that that's had consequences on foreign exchange markets. I want to show you Bitcoin prices because there's been a lot of appetite in the crypto space since the election. Some of this about a favorable Trump administration. Some of it, given the ramped up concerns around deficits and debt and the destruction of fiat currencies, Bitcoin certainly finding favor in that market. And you can see above 90,100, 90,150 plus in session today. So again, more moves to the upside. But the dollar, the reserve currency, it's not missing out on a lot of the movement thanks to that yield story. The yields have bought at a lot of cover and it is moving. You can see morning session. Euro is trying to hold the line, but still down 0.1%, 105.50 the handle. Sterling dollar 126.94, also on the back foot. Dollar gaining versus the Japanese yen. That is a decent sized move. Intraday up 0.25%, 155.83. And the dollar is firmer versus the Swissy. So clean sweep as dollar is king again this morning. To the Asian markets, let's just take stock of how those markets are trading. There's a little bit of fatigue and concern around the Chinese story that we've simply not heard enough from Chinese authorities around some of the measures to shore up the property market, encouraging some off the sidelines. But I think the concerns are for those already invested in the property market, just what sort of pressure they're still under. And you can see the Shanghai market falling by 9/10. Hong Kong stocks shedding 1.5 plus. Japanese stocks in reverse by about 0.33%. Cosby unchanged there, Steve.
OK, brilliant. Thank you very much indeed for that. The German Chancellor Olaf Scholz has confirmed he will bring forward a vote of confidence to December, paving the way for early parliamentary elections in February. I mean, why we're sticking to this schedule of February when we're going to have just ineffective government potentially for 4 months remains to be seen. But anyway, Scholz fired his finance minister last week, collapsing his ruling coalition. Parties have swiftly shifted into campaign mode, with Scholz making his case for re-election ahead of the aforementioned February 23rd vote.
I will never confront citizens with we either invest in our security or in good jobs in the economy and infrastructure. Either we give money to the armed forces or we have secure pensions. Either we support Ukraine or we invest in Germany. Making a decision between those things is wrong, and it's leading our country astray.
Opposition leader Friedrich Merz also made his case to voters during a speech in Parliament.
There is a great sense of relief in our country. For a week now, the so-called progressive coalition of SPD, Greens and FDP has been history, and that is continuing good news for Germany.
Annetta, they're in campaign mode, but my goodness me, they're making us wait.
Yes, they make you wait until February 23rd. No, well, joking aside, they are exactly, they have switched to campaign mode now, all the parties. So the crucial question is whether Olaf Scholz will run as the next Chancellor candidate for the SPD or not. Because if they replace him with Boris Pistorius, the results of the upcoming election could not be as clear in favor of the CDU as we are currently seeing in the opinion polls, because Boris Pistorius, the defense minister, is very very, very popular. So having said that, so it's not a clear win for the CDU just like that. Only if Olaf Scholz stays in the race, it probably is very clear, a clear win for the CDU, and then they can pick whoever they want to govern with, either the Greens or the SPD. At the same time, we yesterday had an event here in Germany, in Berlin as well. The Scholz's advisors, previously we called them the wise men, now there are a couple of women also taking part in that group. They come up twice a year with a report on what should be done in order to move Germany forward and to spur growth in the country. And they were really very open about there needs to be investment quotas because our transportation and also education infrastructure like schools is ailing. There needs to be higher spending on defense. They are even bringing that 4% number into the mix with one of the wise advisors of the government saying that should be the new target, given Donald Trump will probably not give more money to the Ukraine. And then, of course, there needs to be money more spent on digitalization of everything. So you see, and in the end, the debt brake needs to have a reform. Interestingly, Friedrich Merz yesterday also appeared here at an event organized by Süddeutsche, and where he was also at least tentatively open for a debate on a reform of the debt brake, because clearly, as it stands now, it is a big issue for the fiscal space to actually put money into play, into infrastructure and really needed investment. So it is all moving parts right now, but one thing is clear, the campaign mode has started, and Friedrich Merz and his team go into the campaign mode, or go into the election campaign with a pledge to revive growth in the country and reduce social spending, which has been on the rise tremendously over the last 3 years.
Annette and I heard from Robert Habeck on the ground in Lisbon at Web Summit. I can tell you he was in campaign mode as well this week. Well, Annette, we are going to be joined by Otto Fricker, who is the MP of Bundestag and FDP member at 7:30 GMT for a first on CNBC conversation. Coming up on the show, Bilfinger orders surged by almost a third in the third quarter. We'll speak to the CEO, Thomas Scholz, just after the break. Plus, prominent investors give their take on the recent rally in the US equity markets and where it goes from here. We'll bring you more from our Delivering Alpha conversations this hour. And don't miss our conversation with Merck CFO after the pharmaceutical company posted stronger third quarter earnings growth than expected on the back of lower costs. That is coming up at 7:45 GMT. German industrial services provider Bilfinger has confirmed its 2024 outlook after posting a 15% annual rise in its third quarter revenue, thanks to a 31% jump in orders received. Let's get into that with Thomas Scholz, who is the CEO of Bilfinger. Thomas, just get us a sense of how those orders are looking, because we heard from Siemens this morning and the order book also looks strong. So what sort of demand are you seeing as you look out down the track?
Good morning. Our demand, what we see, is clearly to improve efficiency and sustainability. In a market like in Germany, which is really on the downward trend, we help our customers to get more efficient. And in booming markets like the Middle East or North America, we actually help them to expand. So our business model fits really well into this time.
Looking at the revenue outlook for 2024 now, 4.8 to 5.2 billion euros on EBITDA of 4.8 to 5.2%. What could go wrong from here? What are some of the challenges still that you're looking at, whether it's the German economy, whether it's international markets that are bracing for, whether it's a stronger administration of investment under Trump, or whether it's more tariffs to come?
No, we don't see anything which actually can hamper our outlook for this year. Absolutely. We are in the middle of November. We know what will happen. And that's the reason why we confirmed our outlook for this year. The real important part for us is, of course, the profitability too. It's not only about growth with, as you said, more than 30% growth overall. It is actually quite a big step up in the profitability from 5.1 to 6%. And that is actually based on our operational efficiency on our efficiency program, as well on a very, very good product mix in the third quarter.
Hey, Thomas, nice to see you. Let me follow up on Karen's question and just ask you one short question and one longer one in two. A, what percentage of your revenues are based in the United States? I know you have a very heavy presence there. And B, do you believe that will insulate you against tariff wars?
At first, tariff wars will be most likely on products. We are offering service with US colleagues in the US market. So we don't import anything to the United States. We have our people there. The thing what we have is intelligence transfer, knowledge transfer between Europe and the United States and backwards. So that will not hit us as far as we see it. We think that the US market will grow faster from now on, which is positive for us. Then on top of it, when we look into the outlook generally, we have a two-sided world here. We have a growth market in the United States, we have a growth market in the Middle East, and we have Europe now hopefully are getting their acts together to respond to an economical downturn or side movement in the right way.
Thomas, that's a great answer. What on earth gives you hope that Europe is I've seen the wonderful reports from Letta and Draghi and hopes for more economic growth. What actually is happening in Europe that gives you hope that the politicians are getting the message?
You know, from time to time, organizations, societies need headwind to lift up. And we see headwind. We have the Ukraine war, we have the crisis in Israel, Gaza. We have a new president coming into the job in the United States. We have changes of government in Europe, not at least in Germany, which is quite a positive news. So out of that, there is a lot of political and social movement. And the industry is standing up and telling very loud and clear in media what we need. And what we need is investment, less bureaucracy, and stopping to talk and starting to act.
Thomas, I hear what you're saying, but for a start, we've got 4 months, give or take, before we get a German government. Secondly, if it is going to be led by the CDU, they're the ones who invented the debt brake around about 15 years ago. What gives you hope that they're actually going to start spending more money?
So I would not always put everything into one comment, like the debt brake and so on. It is more about that we need an initiator to unlock the potential what the country has. We were in a kind of a paralyzed situation for the last 2-3 years. A lot of talk, not really something happened. So now it's the time to make things happen. And a new government, no matter how it looks like, will bring that movement, because the people in Germany are fed up with no movement. And you see that in the polls, you see that how the verbalization on demonstration in the media is coming. So I'm actually optimistic that we will go into a better future. Then the last thing, we all can look back, and we can look back for years and discussing that. The most important is the same as a CEO to look forward. What are we doing the next 5 to 10 years? What is on the agenda? Infrastructure, digitalization, education, and so on. It's all known, but we have to unlock the power and the motivation in the country as well as in Europe. It's not only Germany, by the way.
Thomas, let me pick up on one of those points and pivot towards clean energy, because page 4 of your release today, you're talking about increasing energy demand, nuclear industry revival. We're hearing a lot about the ability of nuclear to power AI data centers of the future, and this may be one of those motivations for nuclear, where it's been looking for some sort of killer app for years. What are you witnessing? Is it the AI race, and which countries are really leaning into this nuclear story?
Actually, I think Germany will change their opinion, or the political decision. It's not a social decision. It's a political decision to stop nuclear power. And the Christian Democrats actually said, we will look into that again. It's not the time to run party books. It's not the time to run ideology. It's about to look into what is the best for the country. And the best for the country is a strong industry. And it will automatically bring green nuclear energy back into Germany. That's my clear belief. And you know that I'm voting for that for as long as I'm in Germany.
Are you saying the Greens need to change their position on nuclear?
Let's see who will be in the government of the future in Germany. And I hope that the ideology to say yes or no to technology will stop, and we look for that what is the best for the country. And nuclear energy is green energy. The whole world knows that, only one country not. So out of that, we have quite big hopes that nuclear energy will come back in one way or the other.
That's absolutely fascinating. Of course, we all remember the reaction of the German government post-Fukushima, Thomas, and your stance is noted. Nice to see you, sir. Thank you very much indeed for addressing the corporate and global issues there. Thomas Scholz, CEO of Bilfinger.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.